Okay, all right. So you know that now we already know that the bias is to the upside. Okay, we have already seen here, so we can hold a trade a little bit longer. It doesn't matter. 3 hour we can exit it. Okay, and now once we break through it, what do we call this process? You see, increase in volume, increase in spread. What is this? Jump across the creek, right? Right?
Yeah.
Okay, jump across the creek, increase in volume, increase in spread. The spread is also increased. Jump across the creek, and now at this point, the London opens, right? We see the same thing here. We draw a higher point here, okay? And we have this one here, right? Higher point. And then we have this one here. Now, can you tell me which one is more stronger? Buying climax or this one here? Reversal from this side. Which one is more stronger?
Yeah, this one.
This one, right? So we call it as buying climax, let's suppose. Okay, because what happens right after here, why we call it as, because we don't have a channel, right? We cannot draw the channel over here, right? It's impossible to draw the channel over here. So we have no oversold. Do we have oversold?
No overbought.
No, sorry, we have no overbought. When we have no overbought, then we will say that this is a buying climax and this is selling climax, right? We compare like this. Now you tell me which one is more stronger, selling climax or buying climax? The volume, see the compare the volume. Which one is more stronger?
Buying climax.
Okay, buying climax. Because of volume, the buying climax is more stronger. So we call it as failed selling climax. Means it's failed. It has no significance. No. So now the bias is to the downside or to the upside?
Downside.
Downside. So if it's failed selling climax, then this is what? Automatic. So this would also become, if this is failed selling climax, this will become as what? Automatic
AR.
reaction. AR, right? Failed selling climax is equal to AR. This one is what? Secondary test. Right? After secondary test, this is what? Okay, here we have strong volume here. Yes, we have, but still we have buying climax that's much stronger than this, right? Okay, then after this, and it does not come on the reference point. You see, it does not come on the reference point. The reference point is here. So this carries no value. And the price reversed from here. And then what do we see here? The price tested again. Right? And this is what? Again, secondary test. But now, before secondary test, what do we observe here about the secondary test? This one, because this secondary test, because this the next bar is down. So this becomes secondary test. What do we observe about this secondary test? Can you tell me? This secondary test has a lower high. Right? So we can draw the line over here, saying this becomes what? You see? Effort versus no result. Am I right? This is what? This point. Small spread, huge volume. We call it as effort versus no result, right? So this is actually EVNR, effort versus no result, plus upthrust. Am I right?
Yeah.
Okay. So upthrust. And now what do you notice here? We can take a position here, or if we miss this point, then see the next point here. What is the next point here? No demand. Am I right? Right?
Yeah.
The spread is low, then the volume is lower than the previous two bars. So no demand. So we can enter a trade right over here or right over here. It's up to you. If you miss this point, then you can easily analyze, catch it back here. So our stop loss would go on the last high. Our last high was this one here. So we just place above here, right? And how about our take profit? Our take profit would be this line. Here we observe this buying climax, selling climax, this one, right? The price ultimately tests this region. Because this is, if this is jump across the creek, then this region is what? This is what?
FPL.
LPS, last point of support. And exactly at last point of support, we will exit after. And as we see last point of support, what do we see here? the price breakout, and then the price reverse from this point, right? And see the volume. Key reversal, right? Huge volume, and the price just went down. This low of this bar rejects the low and then reversed up. Key reversal. Okay, and in this key reversal, what do we know? We can take our another trade. If we go long here, can you tell me where would I exit? Let's suppose if I go long right over here on this point, a stop loss, where would I place my stop loss? Just below the low of this one, right? Because it's the low, right? And how about my take profit? My take profit this line. Okay. So that's 2.48. Got it?
Yep.
All right. And this is how we trade out. Now, after this 10 o'clock, you know, the London market starts closing. Okay. So, I mean, we only need to catch these 2 points, this one and this one, these 2 and 2 points. That's it. Okay. So we can take 3 trades. One trade, this one trade. Second trade is reversal. Third trade here. 3 trades. In 2 hours, we can catch 3 trades. And each of these trades will fulfill your target. Got it?
Okay.
Yeah. So if you commit like this one, right? And as we know that the price just reversed here, right? And the price came back and just targeted here. Would you go short? Now, as we go down, what do we notice here? If you just wait, let me just remove these points here. Now, as we go down here, we can, if you try to draw a structure from here to here, because it's the first, after this is the first lower high, right? From the lower high, we draw the structure here, and we try to join it. We saw what? Overbought. Oh, sorry, oversold. Am I right?
Yeah.
So LPS plus oversold. So now what is the bias? And bullish bias. And now, once we break through it, this is as we go through it, right? Yes, there are some buyers, but here the buyers, the selling volume is very strong, right? And now, once we break through it, right over here, what do we notice here? This one, the price struggled over here, right? At this point. This is what? Key reversal, right? So we can just take our next position if you want, but I won't suggest it. But if you want, you can just go for 2 hours normally, the upside. Okay. And now, as we go up, what do we notice here? We can, as we are going up, we see that the price was this high, low, and this becomes first. This becomes higher, low, right? And this becomes the first, right? So this is the higher low, right? From here, this point, this is the first higher low. So we can draw this point here, and we can draw the channel if you want, but we cannot see any kind of. But as we go up and up, right, we can draw this structure of the thrust right over here. You can see this point and this point, right? If we draw this, we can see the structure of the thrust. And now exactly at this point, this is what? Over. You can see this is what? See this volume bar and see the volume of the bar. No demand, right? We can draw the structure from here to here. And now what happened? As the price made the first attempt, right? The price went down, no supply. We do not have, because we have equal volume, equal spread, right? There is no effort, no result. So we cannot short this trade. Why will I go short here? Tell me. Because the volume of this bar of this is equal, the spread, volumes are also equal. So nothing changed, right? We don't have entry signal over here. But as we go down here, okay, as we go down here, we have seen here that the price made another attempt and went up to the upside. And now the price is going up, and the price finally reversed from this point, right? The price reversed from this point. It breaks below this low, and now our bias changed. Got it? And now we can further define a channel here, and we can draw this shortening of thrust here. Okay, we go up. If we draw this high and this high, this shortening of thrust, and now what we see here, exactly, no demand. After no demand, the price reversed, close below, good volume. We can take our stop loss right over here. We have a high here, right? This is the last high. We can take a stop loss above. And now, if you want to target the trade, but we can target this point, right? This is a point where the price, because this is a point. If we extend this line, can we say that this is the LPS of this one?
Yeah.
Right, LPS. So we can just observe, and we can exit on the LPS if we take a short trade from here. Any problems so far?
No.
So what I suggest you that these two, I suggest you to trade during this time and this time. That's it. These two trades are enough for you. Like if you just practice these 2 times and execute your trades, you will be able to make 3 to 4 hours every day. Okay, you don't have to care much more. So I showed you how you can make at least 2 hours per day, because if you are risking 0.5% per trade, and your minimum target is 2.5 hours, okay, per session. So how much you make? 2.5 into 0.5. 1.25. So 1.25, because you will also have some losses, right? So let's suppose you make 1% every day. Okay, you multiply it by 20 days, you have 20 days, so you made 20% a day in a month, right? Now 20% in a month on a small account would not look good, right? It's just a very average return. But if you have a 100K, 400K account, I mean, like if you have a funded account, then it makes a big difference, right?
Yeah.
Yeah. Right. So let's suppose I just show you. We have let's go for TMO. Okay, let's start with that TMO. Let me show you an example here. So let's suppose you go for a 200K challenge account. Okay. Okay. You go for a 200K challenge account. 200K. So we have 30 days trading period. Minimum trading days is 10. Minimum daily loss is 10, right? Minimum days means you can complete your phase 1 in 10 days. But the minimum days, the maximum days provided are 30 days. Got it? The minimum trading days for step 2 is 10 days, and the maximum days are 60 days. If you become a FTMO funded trader after passing these 2 challenges, you will be awarded a 200K account to trade. Okay, and how much profit how much they will pay you? They pay you up to 90% of your profits. 80 to 90% is yours. Okay, whatever you make. So if you see here, so here you have 10 days. Your target on this is the max daily loss is 10,000. Means you cannot lose more than 10,000, which is 5%. If you risk 0.5% per trade, do you have a chance that you will lose 5% in a day?
Not so far, sir.
Not so far, right? Right. Obviously, if you're a bad trader, then you're gonna take 1 or 2 losses, which is maximum 1%, and then you can take another trade, and you can return. You can take another trade. You can re-enter, and you can be profitable. You can make a net profit of 1% per day, right?
Oh, yep.
Right. Only a bad trader will lose 5% a day. Okay, or anyone who is a gambler who doesn't know what's going on. He's just randomly placing the trade. Okay. So the profit target is 20%. In how many days can you achieve? So 20% is 10%. So if you make 1% per day, in 10 days, you will make 10%, right? So you're gonna complete this challenge in 10 days. Verification, your target is how much? 5%. So in how many days will you achieve your target? In 5 days, but you have to complete 10 days for it. So it's easily achievable. So 10 days, 10 days is like in 1 month, you can complete the entire FTMO challenge and become FTMO trader. Okay, and you have to follow all these rules. You do not have a minimum trading days. Okay, the only things you need to care about the max daily loss. You cannot lose more than 10,000. You cannot lose more than 20,000 as a maximum loss. Per day loss should not exceed 10,000. So in the end, got it? And there
Yeah.
is no profit target, means there is no profit target. It's up to you how much profit you make in a month. Okay. So with this psychology, you can easily, be a funded trader. Then they have a scaling plan. If you will increase the balance of your FTM account by 25% every 4 months. Means every 4 months, if you're consistent, they will give you 25% more. So the maximum capital you can trade is 400K. Okay, the 400K. They have been listed on Forbes and all these things, right? You can say the maximum capital you can trade is 400K. So if you take a 400K account, for example, what you can do, you can purchase, you can get this 200K account, 200K and another 200K. And then there is trade copier. Okay, if I go here, then there's a trade copier. I call it as social trading tools. This is a trade copier. You see trade copier? With this trade copier, you can merge both of these trading accounts. So whatever you trade in this first 200K account, your trade will be automatically copied to the another trading account. So what you will do, what are you going to do? You will be able to pass both trading challenges at one time. And once you pass this 200K account, you can contact support. Okay, you can contact support and ask them to merge your 200K account into one 400K. What is now you have a big capital. Even if you make 1%, 20% per day on a 400K account, and they give you 80% profit split, it's a huge return. What do you think?
Yeah, I think it's great.
Now, even if you think that you want to reduce, now if you have a 400K account, you can reduce your risk to 0.25% per trade. How much? 0.25%. Initially, you are risking, let's say, you are risking how much? You are risking 0.5%, right? 0.5% on 200K account. Now, if you have 400K account, you can reduce the risk on 400K account. Okay. All right. And you can make how much per day? Your target? Your target would be 0.5% per day. 2 hours. Right?
Okay.
And here, this is a trading, this is a psychology which you have to keep in mind. As you go up, you can reduce your risk. Okay, your target is 1% per day in this. So what I need to say, if you go for 200K account and join it by trade copier, you're gonna reduce your risk massively. Sorry, if you just go for this one 200K account and then you just join it by trade copier, you connect these two accounts by trade copier. Okay, you see our trade copier is the fastest copier in the market with an average application speed of 50 milliseconds. There is 50 milliseconds is the repetition. So there's no choice, there's no chance that you're gonna that the trade copier will not properly execute or like copy your trade. Got it? There will be zero delay,
Yep.
zero
Okay.
latency. So with this point, what I mean to say, the larger the account, you can reduce the risk, and you can now with 0.25%, how many trades you have to lose for the max 5%? How many trades you have to lose in a row?
10.
20 trades, right? Only a bad trader will lose 20 trades in a row, right?
Yeah.
Right? If only, if you are losing 20 trades in a row, just like this, you are losing every other trade, it means you are not good at trading, right? You should go and just learn trading instead, rather than just trying for profits. Make sense?
Yep.
And with a 0.5%, with a 0.5% risk, you have to lose how many? 10 trades. Even 10 trades are a lot to lose. I would maximum lose 1 or 2 trades. That's it. Okay. And then the third trade would be a big winner. Or I would lose 1 trade and the second trade would be a big winner. Got it? Win. If I'm a good trader. Or my first trade is a big winner. This happens many times. So win rate does not matter. Win rate does not matter. Sometimes your win rate will be low. For example, you lose 0.5% on first trade. You lose 0.5% in your second trade. And you made 4% on your third trade. What is your average one? 3%. Am I right?
Yeah. Right.
So, but what is your win rate? Your win rate is 33%. So you will say your win rate is very less. But win rate does not matter. If you take care of reward to risk ratio, okay, the win rate does not matter. Got it? Because I told you that every losing trade should give you an idea where to enter the trade. For example, if you lose this trade, I show you on chart. Okay. Okay. If I lose this trade, this one here, right? Let's suppose I did not evaluate it and I just see secondary test and I was impatient. I just took my trade right away. I say, oh, this effort was no result. I just place my trade right over here, right? And I'll take my profit. But then what happened? The price came back, hit my stop loss. Okay, I lose -1 hour, but then I got another opportunity, let's suppose. But I will never enter the trade over here. I will always enter at the reference point, right? But let's suppose if I enter over here, I would lose 0.5%, right? And now I get an opportunity here, and now I made 3.5%. So 3.5 minus 0.5 is how much? 3%. Do you got it? So I have a 50% win
Yeah.
rate. I have a 50% win rate. With just 50% win rate, I still made money. So win rate does not really matter. Okay, but obviously, if you are having a win rate of less than 50%, then it's a matter of concern. It means you must reevaluate your strategy. Your win rate should be above or at 50% at least with a Wyckoff strategy. Okay, if
Yep.
your win
Okay.
rate is below 50%, it means then you need to go back and learn and see what you are missing out. You have to practice more unless you make your win rate above 50%. A good trader will never have a below 50%. If his win rate is below 50%, he's just gambling, right? Do you make point? But sometimes we can become emotional and we cannot wait. Okay, for example, I'm just here and I could not wait for the entry. I said, oh, this is post London Open, sorry, post New York Open. I will enter my trade right over here. What happened? The price reversed, hit my stop loss. But this is the middle of the trading range. This has no reference point. If there is no reference point, there is no use to enter. Am I right?
Yep.
So what you can do, you don't need to sit in front of the chart every time. What you can do, you can see this line, you can click it, and you can add alert on trend line. You can add alert, and it says crossing below. If the price crosses down, okay, you will get an alert. Okay, XAUSD crossing the downtrend line, and you can place it, right? This is a trade. Now your alert is created. Got it? Now your alert is created. You can see your alerts right over here. You can see my alert is created, right? Okay, here. Got it? Active. You see? As the price crosses down this region, it's active. I will remove it right now because I'm not. Let's move it. Got it? You see, stopped. This trade stopped. Whenever this trade was triggered, like a while back, I took my trade and I made a profit. I knew where to enter. So to increase your patience, what you can do, you can on the reference areas, you can create alerts in the trading view. So now you don't have to be on your laptop screen every time. You can install TradingView application from the Play Store or from the Apple App Store. Okay, and you can just synchronize your desktop application with the iOS or Android application. Got it? Now, whatever
Okay.
whatever alerts will trigger on your this one, right? You can automatically, you can just open your MT4 account on your cell phone. You can also open your trading view. You can see now you already have the structure. You can place trade on your cell phone, and you can manage it wherever you are. Got it?
Yep. Okay.
Everything makes sense now. So you see, learning sessions and this one is a little bit different because we have two key areas, right? Because these two key areas, right? There's a little bit different between it. But if you practice more and more, you will understand.
Okay. Okay.
Right? Yeah. Okay. So should we continue or like we end the webinar here? Okay, let's do one more.
You?
Thing. Okay, well, let's do one more, right? Okay. Let's do one more start and then we finish. Okay, remove it. Now you will tell me quickly, okay? 18 May, let's go for 18. 18, okay. The London Open, then can you tell me the London Open? London Open on
London
18 May, this is London
3
Open,
p.m.
right? 8 London Open.
Yeah.
This one is what? New York Open, pre-New York
Yeah.
Open, and post-New York Open, which is this one, post-New
Yep.
York Open,
9 p.m.
right? Now, can
Yeah.
you tell me from here to here, we are on a 15-minute chart. Can you tell me the intraday high and low? At this, at 9:40, at 7:45 p.m., because 8:45 p.m., your New York will open, right? So we have to
Yeah.
see when we are here, we can identify high and low. Can you identify high and low of this one? The lowest point here between this and this point is obviously this, right? And the highest point, this one, right?
Yeah.
So we mark intraday high and low, intraday London high and low. And after this, what do we do? Right? What are we at? What is the criteria here? If you see the background here, if you draw the structure here, you see from here, here. We just draw a little structure from the back side. Just to see the bias. And this one here, shortening of the thrust. After shortening of thrust, this is what? Oversold
Oversold.
plus selling climax. Okay. And this is what? SOT, shortening of the thrust. This one is what? This is what? AR plus JAC, right?
Yeah. Right.
Okay. And this is what? Secondary test. A secondary test has what characteristics? Higher, low. Am I right? Okay. Now, do you understand what is our bias? Our bias is what? Before London Open, bullish, right? So between
Yeah.
London Open to here, between London Open high and low, the bias is what? Bullish, right?
Yep.
So now we go to the 5-minute chart and define a structure. Now, can we draw the structure here between 15 minutes from here to here? So the structure, it's difficult to draw. So we go to the 5-minute chart time frame. Now, can we draw the structure here? Yes, now we can draw the structure. Sorry, I moved it here. Where should it go? Okay. All right. Now, can we draw the structure from here to here? Yes, we can draw the structure. High and low, right? This is first structure. And we also have a shortening of thrust here. We join these two ones. So this is oversold, right? Oversold second test. And now here, at this point, what do we say? At this point, the bias is what?
Bearish.
Bearish. Between high and low, the bias is bearish. At this one, because this is secondary test and coming from oversold and Sally climax, the bias is here bullish. Now, what happened at the London Open? You see London Open, what happened? Sorry, at the New York Open. The price came back, test this secondary test low, right? This secondary test high low. This one is spring. Am I right? So can we say that at the intraday London low, the bias is bullish? At the intraday London high, the bias is bearish. Between intraday London high and low, the bias is bearish, right?
Yeah.
Now, if you go to the 3-minute time frame, what do we notice? Yes, we have a spring here. You already know that. I don't know why I moved that. Okay. All right. Now this is what? This is spring, right? This is spring. After the spring, what do we see? This is what? Test of spring. Am I right? If this is spring, this is test of spring.
Yep.
TOS. And what do we notice here? Right over here. You already know. Effort versus no result. Right? We take a position, but what happened? Unfortunately, if we place a stop loss, we will hit a stop loss here. Right? We have no choice, right? We have lost a trade. Now we will re-enter because the bias is still bullish, right? So you see, what do we see here? Key reversal, am I right? Key reversal again, right?
Yep.
And now, if we enter again the second trade, where would be our target here? My optimal target would be high or low, right? I can target the absolute high, but if you target absolute high, it will take a lot of time to reach this high, right? So I suggest you not to target too high. Okay. So what you can do over here, you can target just like 3R, 2R, just to make up the loss, right? Okay. Got it? But you can easily prevent this loss. Why? How can I easily prevent this loss? Can you tell me? Because this does not come as a reference point. If you see, this does not come as a reference point. The reference point was either this line or this line. Am I right? Either this line or this line. This effort versus no result did not come on the reference point. It came below it. And so you can easily avoid this loss if you draw the reference line. Got it? And now as you go up, this is what? We draw another one. This is our last high, the previous high. And this is what? Jump across a creek, right? And this is what? LPS, am I right?
Yeah.
This is what? This is minor creek. Can I say this is minor creek? Right? This one is what? Major creek. This is minor creek, right? And this is LPS. And LPS, what do we see here? No supply. Can you see here? This one, no supply. You see this bar range, the volume, very, very small. We can place our stop loss right below this one, right over here, the last low, which is this one, the last low, below it, and our target would be this one, high. We made 3.36 R from here, we made 2 R from here, we lost 1 R from here. But this loss could easily be avoided if we make the reference line, if we only trade on the reference line. Understand?
Yep.
Right? But this is, you will say how this, like, how would we, this trade could be easily avoided. That's what I mean to say. But you will say that there is no reference point here. Why did I enter my trade over this point? Can you tell me? But if we see the last intraday high, if this is minor creek, this is lower high. Can you see? Now you will see that this is exactly happened at the reference point. Am I right? If we draw this line over here, this lower high. If this is minor creek, this is lower high. And this exactly happened this time. Do you understand?
Yep.
But can you draw any reference line from here? There is no reference line. Either this one and these two. So you have to take the trade only on the reference line. Got it?
Okay.
Yeah. All right. So this is spring, test of spring. This is higher low LPS, and now once this is higher low, what we can draw? We can draw another line. And then now the London Open. Now the post New York Open right over here. Am I right? At this point, right?
Yep.
So we are not interested in taking this trade here. We have to take only the trade once the London Open here, right? So I'm not taking my trade over here. What I can do, I can draw another line because it's higher low. It's higher low, right? LPS. As compared to this low, this higher low after spring. So we can draw another line from higher low, and we can observe the spring part here. This part here, spring completion. Now, what I can do, I can either take my trade to the last high, which is this one. Okay. All right. And after this, we have another intraday low, which is this one. If you see here, what happened? The price breaks through it, came back. Reference point is right over here, this moving average. It reverses back here again. Okay, we can trade a trade, and then we have this second one, right? So I can ultimately target either this one, which is this one, right? Either this one I can target this high, or I can target the last high as well. But as I told you that I do not target the absolute high because it will take much more longer time to reach here. Understand? Now, interestingly, as I told you, if this was a higher low, right, from here, I can draw another line from here. And I can identify from here. After this LPS, this is low here. After this low, the high low was observed from here, right? You see, after LPS,
Yeah.
we see spring. This is spring. After spring, when was the first higher low? Right over here. So if we match this higher low and this higher low, right, and we draw a trend channel here. Sorry. What do we notice here? As we go up here, we have a huge shortening of thrust. Got it? And then we also cross the last intraday high. Now, there is no way to enter this trade. There is no way to enter this trade here, because if we enter over here, we don't know where to exit, right? We cannot enter the breakout. We need either so the oversold was right, ended right over here. Am I right?
Yeah.
How do you know this was the end of oversold? Because after this, the price reversed. This is a bearish bar. So this is the end of oversold. Now, what we can do easily, we can draw a trend line over here. This one here is oversold plus buying climax, automatic reaction, secondary test, spring, and then after this one, what do we notice here? The price reversed here, up thrust, we can place a position right over here. Our stop loss will be placed over here. And how about our target? Our target can be, and my initial target would be this one. This one, little bit below it, 2R. And then, because after this, the price may reverse, right? But now we are, since we are already overbought and we have already cleared this intraday high, now the price will reverse, right? So our second position would be this one, right? If I draw the automatic reaction line from here, because this was the automatic reaction, right? This is AR, right?
Yep.
So if you draw another line from here, from the AR as the Wyckoff structure, we exactly came to this point, and what do we notice here? The spread is very, very similar. No demand, effort versus no result, right? We can place our
Right.
trade manually here. Stop loss would be this last high. This is the last high here. You can see, right? We can place just below it, last high. And now our target would be, we can ultimately higher. This is the last horizontal line after this. Am I right?
Yep.
We can target. And then after this again, the price, what happened? The price reversed. Do you understand the psychology? Right?
Yep.
Okay, all right. So we finish the setup here, and then I will send you some recorded video as well again, and then so that you can review the concepts. Okay, so I will upload these two sessions on the YouTube. So see you later. Bye bye.
Bye.